It's good to see everybody today. Um, and I'm going to take us through the journey of LemFi. I think everyone has sort of been calling it Lemonade Finance, but the company is now known as LemFi. And the key point to make as I sort of take us through that journey is to talk about the anatomy of a startup at different stages. What your startup will look like pre-seed, what your startup looks like seed, and what your startup looks like Series A, and so on, right? And when I was thinking about this last night, I was like, what is the best way to sort of illustrate the journey? And I thought, let me share the pre-seed deck, the seed stage deck, and the Series A deck. Okay. And as you sort of look at the content thoroughly, you sort of see that the company has sort of changed, and you also see the changes, right? And so on the screen, we have the pre-seed deck of LemFi. And at that time, it was called Lemonade Finance. So together, this is going to be interactive, right? So together, we're going to go through it. I'm going to ask questions, and then we're going to talk through the differences in the different decks. But what you will also notice is that the content of the deck, or sort of the way it's structured, also sort of illustrates what the company looked like at that stage, right? Because when you start a company, the truth is you really don't know a lot, right? You have so many assumptions. It's okay for them to be assumptions. The most important thing is just to start, right? And then you can figure out the rest later on. So in the very early days, I think one of the first things we did before we even started this company, and sort of share the context, was we called OO, which is one of the reasons I'm doing this talking engagements, because I never take one. And I was like, oh, we're going to start a company. And, I think it's going to be stocks trading, because I think Robinhood was sort of a big thing at the time. Who was like, my guy, you're going to start finally. Oh, yeah, now, let's go. He was so excited. And I think the next day we said, okay, no, it's going to be digital banking. And we kept evolving the entire idea until we sort of figured out what would work. And putting this deck together was sort of also OO's brainchild. So we did the first version, we sent to OO, edited it, we went back and forth, right? Just to share the context regarding the deck. So we thought, well, if you're going to build a remittance app or a diaspora financial service app, exchange rates was a big deal. Managing accounts back home and abroad was a big deal. Access was a big deal, right? And then we sort of illustrated the features we wanted to build. But remember, we didn't have any of these features. Let me see if we have this is what the app looked like. If you use LemFi today, or you've sort of seen it, you sort of realize huge difference between the design at that time and design today. So if you're not embarrassed, and I'm sure a lot of people sort of said it, if you're not embarrassed about your design, pre-seed or when you're starting the company, then you're not starting early enough. Doesn't matter. Like, there'll be so many bugs. It won't look that great. The color palettes won't be as sophisticated as they should be, but it works, right? And you probably just do one thing well. Just one thing, right? And for this, at that time, you know what? Canada was even the wrong market. Canada was sort of the smallest market ever possible to do a diaspora banking app. Because, like, if you sort of look at the statistics, it's just about 100,000 Nigerians in Canada. In the UK, there's over 1 million. In the US, there's over 1 million. In continental Europe, there's over 1 million. So typically, the best place to start shouldn't be Canada, right? It should be sort of the UK. But when we were starting, we needed a license. And Canadian license was sort of the easiest to get, right? Should we wait 6 months to get the UK license, right? And that's sort of a 50-50 chance. Or should we start in Canada where we already had a license within that month, right? So we started in Canada. So again, it's important to start. Doesn't matter how tiny it is, you sort of expand your time as you go in that journey, right? I was looking at this page yesterday, and what was so clear to me about this particular page is that half of the information here was incorrect. There isn't 170 million African diaspora. It's a lot. It doesn't exist, right? But we thought this was correct at the time. He's like, yeah. Oh. Today, you know what? This page is also very interesting. When we're raising this round, we thought it was wise to put WorldRemit, TransferWise, SendWave, Western Union. Really big companies, lots of millions of dollars as our potential competitors, right? And I remember we were talking to one of these investors, and I was like, what are you talking about, Ridwan? You're in Lagos, you want to start a remittance app, you're telling me that we should give you $500,000 to beat these guys. Please, don't waste our time. Today, in African market, we're bigger than each and every one of them, except SendWave. But we're not bigger than SendWave in African market. But each and every one of them, WorldRemit, TransferWise, we're bigger than them. You know what? Another thing here, we thought 2% transaction fee was going to be what we would take. At the time, we were actually losing money. So what happened? We got a license in Canada. We didn't know how to get a banking partner to process payments in Canada, right? So we would use Flutterwave, because I used to work at Flutterwave. So we'll send, if you put your card details in Lemonade Finance at the time, we'll send the payload to Flutterwave and say Flutterwave should have processed the transaction as an international transaction. That cost 3.5 or 4.5%. If you sort of see the pay stack of Flutterwave page for international processing, sort of 4.5%, right? You don't make 4.5% on FX. Best bet, you make 1.2. These days, it's so bad, it's 1%, and so on. Again, you would not have all the answers. And as you go in that journey, you learn. What you need to do is adapt. As you learn new information, you sort of go into your P&L, adjust the framework, adjust all the guessworks in it, right? And sort of do that. Okay, so one thing to highlight here, traction. So before we started the company, I used to work for, I think the best advice I got starting a company was sort of from Mark Essien. So I used to work for Mark Essien several years ago. And when I worked for him, Mark would say, I would have side projects. I had a side project called bestprices.com or .ng. I don't think anyone here remembers it. But it was once a time in Nigeria. Jumia, Konga, etc. was sort of the talk of the day. And Best Prices was sort of like this website where you could go and you could compare prices across e-commerce websites, right? And when you click on it, we were using affiliate links to sort of make money if you sort of purchase something on that website, right? And so Mark would see that I had all these side projects and I'd be like, Ridwan, I know you're going to start a company one day, but I think the best advice I'm going to give you is save first. Have some savings. At the time he was giving me that advice, I didn't think it made sense, right? But like when I think back today in hindsight, what he meant was if you personally as an entrepreneur, especially in the emerging market, and this might just be useful to emerging market entrepreneurs, you're in a system where There's really no health insurance. A lot of things don't work, right? There's nothing to fall back to. When you have savings, you have that to use to sort of live your life while embarking on this very painful journey, right? And so you're not hoping that the money you raise is the money you use to pay school fees or the money you use to feed yourself or the money you used to do. That should come from your own personal money. And invest as much as possible from the money you raise on the business, solely on the business. And so for me, I was fortunate that before I started this company, I used to work for Uber and OPay. I had some meaningful savings, right? But it came in handy in two other places. One was I could feed myself, I could pay my rent, stuff like that. But the second thing was, this was our deck for the first fundraise ever. And we already had one license, and the other one we had gone through interview stages with the FCA. But this was our own first deck. And we already paid engineers, and we already had the product live. So that meant somebody was paying the salaries, right? Somebody paid the consultants to get the license. I personally wired 19,000 pounds at that time to the consultants, right? And so as you sort of have your own money to sort of take the risk, the investors see some seriousness in what you're trying to build. This might just be peculiar to emerging market, right? But that's the reality of emerging market. "12 months runway," that was a lie. I didn't think that money lasted like 6 months. Yeah. And another thing to highlight here, focus. Like if you think about this page, today, LemFi supports remittances to at least 45 countries. Philippines, India, Pakistan, Bangladesh, Brazil, Nigeria, Ghana, Kenya, and so on. And these are markets that are fast growing. But at this time, we said Naira, pounds, Naira, Canadian dollar. And that's the only feature we had. That's all. It was no more than that. You couldn't go in and do Kenya. You couldn't go in and do Ghana. You could not. It was Nigeria, right? But if you sort of look back, let me quickly take us a bit back here. Even on the home page, it was so clear. Move and manage money between Canada and Nigeria. That's all. Today, that has changed. You wouldn't see that. So it doesn't matter. In the very beginning, you can focus on a very small TAM. Total addressable market, right? And get it right. What happens there is you build the muscle to sort of put a good thing together, debug your app, integrate, learn, figure out how to market and distribute the product. You figure out a lot of things just doing that and capturing that small TAM, right? And so that was sort of the deck, pre-seed stage, right? So if we think about it, a few key things here. Focus, 1. 2, get started. Just get started. Doesn't matter. 3, you won't have all the answers, right? But again, keep going. Okay, so this is a seed stage? Yeah, seed stage. Remember, in the pre-seed, we said we wanted to raise $500,000 to make $300,000 revenue. Not $300,000 monthly. We thought the most money we could make that year was $300,000. Okay. So if you sort of now, this was seed stage. We're gotten to YC here. This was the deck we used in demo day. And if you sort of go through YC teaches you a lot of things. How to present your deck, what to focus on, how to speak to investors, how to put together your Excel sheet for sort of running the process with the investors, right? And also how to create FOMO, right? I think in the pre-seed stage, OO actually did all the FOMO creation, right? So let me see that exciting part. When we're ready to raise, OO will sort of say, oh, give me the deck. And OO will send the emails one after the other, right? To the different investors. And we'll say, Ridwan, I don't do this one. Just tell them, say, this thing will be this way, this way, this way. No worry. So whatever he said, I'd say on the call, right? And I would add, oh, we've already raised money from XYZ. So the round is going great. And then I'll be like, thanks. And then I'll follow up a few weeks later and say, we're about to close the process. And I'll message you on WhatsApp. Oh, we'll call the investor. God, if you know enter this thing now, no see, I no tell you. And a few weeks later, they'd wire the money. And that was sort of the process that we ran pre-seed. Seed stage, I don't think O was not even involved at the time. But let's go through what we had achieved. So if you sort of look at it, we started November, December was sort of pilot stage. The real product started January. Within that half of the year, we were already processing $5.5 million monthly. We sort of highlighted 135% month-on-month growth rates. So let me explain what YC thought us about putting this page this way. Michael Sebel was our partner, and he's like, Ridwan, if you tell an investor that you went from one customer to two customers, right? Or you tell an investor you grew 100% week on week, which one do you think the investor prefers? Which one do you guys prefer? 100% week on week, right? But it's the same, because 1 plus 1 is 2. That's 100% growth rates, right? And so, YC will sort of teach you how to do that. Say, look, it's all about how you present it. 135% month-on-month growth rate, right? It's different from saying we went from 5 million to 10 million or whatever. That's just better, right? So you'd seen we'd evolved a bit in how we presented the documentation, right? Now, we're getting the license in Canada. We're getting the license in the UK. We're getting the license in the US. All of these happened in less than 8 months, if you look at the timelines, right? And by this time, we had $23,000 of monthly revenue. So that means in that first year, we didn't even make that revenue we said we wanted to make, right? But at least we'd gone from 0 to 23,000, right? We'd put the average transacting customer. We just focused on numbers. Do you also see that? Focused on numbers. So at this stage, it's more important how you present the numbers. This is just storytelling. This is storytelling. This is storytelling. Storytelling. The rest is just storytelling. You don't see the interface of the app. It was just storytelling and numbers, right? And that was it. So pre-seed, we had incorrect information, right? Incorrect time, incorrect this, but we had traction that we'd gotten the license, the product was there, right? And we were serious because we'd committed some of our own money, right? Seed, we had traction. So what did we put in front of in the deck? Traction. It's like, hey guys, we have $23,000 of revenue, growing 135% month on month. This is the TAM. And I think Was the term sort of correct here? Oh, yeah. Term was then sort of correct here. The last time was like $100 billion. Yeah, this is much more accurate. Okay. And this is what we thought we would get to. And you know what? Like if we sort of think back at the time, we didn't even think this was possible. Like, what are you talking about? $50 million? Thought, lives will be made. $50 million a month? We just put the number because we thought it was a whole number. It made sense, you know. Yeah, and that was the deck. So it was more traction. So when you're raising your seed round, you want to show traction, right? And you want to sort of emphasize the numbers. Now, let's look at our Series A round. This is where you see the complete shift and complete difference in the mindset of the entrepreneurs, the mindset of the team, and the progress that has happened, right? So you don't want to go through pre-seed, seed, Series A, no progress, no traction, and you're upset that no investor is sort of giving you money or giving you time, right? There has to be tremendous progress, right? You also don't want to go through those phases without showing that you as an entrepreneur have sort of gotten better at doing this thing, right? I'm just going to slide through the Series A deck just to show you what it looked like, and then we'll go back to the beginning again to sort of take it one after the other. So you sort of look at the Series A deck. The design was a lot better. See, we now had a logo, we had a personality, right? You know, style. The app was completely different. Looked better, felt better, the vision was clearer, right? I don't think we reached $50 million monthly. So we're already halfway through, right? So let's just go through the entire design. Here we sort of knew what the architecture would look like. Now we even had bigger competitors now. Sort of put Revolut there. That has no business with us. Okay, so let's go back. Okay, but we get the point. So Series A, we're a bit more serious-minded. We'd grown a lot, right? And we'd evolved in how we thought the business should be. What were we building? What would it look like, 5 years from now, right? What makes us different? In-depth analysis of every single segment, we knew our competitors better. What were the features that sort of differentiated us? And we had serious revenue, at least at that time, right? So you sort of see the difference. So now, we sort of even knew the meaning of CMGR. I never knew what that meant. ARR, I always thought this was, oh my days. But one thing to note here is that it's very common to sort of raise a Series A round once you sort of cross, or you're about to cross, like, I think, is it $100,000 or $200,000 in monthly revenue, I think, right? So we had multi-currency. And I think in this deck, we started talking about other countries, other African countries, seriously. So let's take a look at it. Yeah. Okay, so let me go to this particular page. Okay, yeah. So you see, now we had Ghana. But if you sort of remember in the beginning, it was just Nigeria. So by this stage, we had Ghana, we had Kenya, we had Uganda, we had Tanzania. So as you can go from a small term and expand the term, because as you sort of conquer one, you build the confidence to conquer the other. And then you build the confidence required to conquer the next one. If you sort of set yourself, you can set yourself up by going for like 10 things at once. Let's say in the beginning we said we wanted to do Nigeria, Ghana, Kenya, Uganda, and we sort of put the apps, the integrations there, right? And we sort of just pump performance marketing. I can tell you for free, what was going to happen is we would not have good service, one. Two, we would burn money acquiring customers that didn't really get a great service, right? So we would have really high churn. And we would not have built confidence in how to actually build a great product for a small customer set, right? But because we had built for Nigerian users, we then understood the CAC on Facebook. We then understood what marketing channel worked better. Did Facebook work better than Instagram? Did Instagram work better than YouTube? Did YouTube work better than influencers, right? Doing for just Nigeria, which was the closest market to us, right? And so when we knew all of that, you can sort of write a small playbook and then say you're going to go after Ghana and use the playbook in Ghana. But it doesn't mean it will work. But at least you have somewhere to start from and readjust that playbook. Does that make sense? But if you sort of like go after everything, then you're in trouble. You won't go that far. You waste all the money. You not really learn a lot. And before you know it, you've run out of $500,000. Right? And then you don't have revenue. And then you have a high churn. Right? But by this time, we knew what Ghana was like. We knew the term. We knew what channel worked for Ghana. We knew what channel worked for Kenya. Right? And we knew, Ghana should use influence. For example, Kenya's influencers don't work as well as just free education there. Influencers don't work as well as they work in Nigeria. So that was a lesson we learned, right? And the type of influencers that work in Kenya are also somewhat different from the type of influencers that even work at all in the Nigerian market, right? And so it was more important in this stage to show the sophistication of the team, the sophistication of, and you see that at the end here, we had churn graph, right? You have to show the sophistication of the know-how of building a great product and scaling it to multiple users. You have to show the sophistication of that team. Do you have the right team? In the first deck, it was just, do you have the right founders? If you also notice the difference. First deck, second deck, founders, third deck, team. Because if they're going to give you $15 million or 10 or 8, it's important that you have a great team that can sort of manage the money and use it to sort of get to the next stage. Yeah, and I think this is where I stop, and I'll take any questions that you have.